WTI bulls seems to have continued to push the commodities price higher, and despite a correction lower yesterday and today, WTI's price are still higher than our last report. For the time being, we tend to have a look at the conditions in the US oil market, yet also have a look at the supply and demand sides of the international oil market. In this report, we aim to shed light on the catalyst driving WTI's price, assess its future outlook, and conclude with a technical analysis. Making a start with the conditions in the US oil market, we have to note that the number of active US oil rigs increased according to Baker Hughes by 6. The increase of active oil rigs in the US tends to imply that demand is on the rise, especially if one considers that active oil rigs have been increasing the past 4 to 5 weeks. API, on the other hand, reported that US oil inventories continue to drop in the past week by 1.5 million barrels, with the release implying that aggregated demand surpassed production levels. Thus, the US oil market remains tight after prior week's reading first reversed the slack reported in the past month in the US oil market. It should be noted that EIA's crude oil inventories figure reaffirmed the tightness of the US oil market by reporting also a drawdown, this time of 1.9 million barrels. Should next week's readings reaffirm the US oil market's tightness, we may see oil prices getting some support. On a deeper fundamental level, we note that Fed's interest rate decision. The bank, as was widely expected, remained on hold and seems to verify the rate cuts are coming. Yet in its accompanying statement, the bank also showcased some hesitancy in cutting rates. Furthermore, the new dot plot verified the market's current expectations for a total of 3 rate cuts in the year, which also tended to weigh on the dollar. So on one hand, the weakening of the dollar tends to usually support oil prices, given that the commodities is primarily denominated in US dollars. Also, the possibility of easing financial conditions could improve economic activity, thus increasing demand for oil. Both of the pre-mentioned factors tended to be supportive of oil prices. On the other hand, the bank's hesitation to start cutting rates may imply a prolongment of tight financial conditions in the US economy and could have weighed a bit on oil prices. As the last fundamental issue on an international level this time, we note the situation with Russian oil exports. Reports surfaced at the beginning of the week that Russian exports of oil for March are expected to have increased by 10% on a daily basis if compared to the initial plans. Increased exports seems to be going out from the country's Baltic ports. On the flip side, we highlight the Ukrainian drone attacks against Russian refineries, which may curtail oil supply on an international level. Also, please note that US sanctions on Russian oil seems to be taking place on Reuters reported that India's Reliance Industries, operator of the world's biggest refining complex, will not buy Russian oil loaded on tankers operated by shippers Sovcomflot after recent US sanctions. The news tended to highlight the prospect for additional tightening of the supply side of the international oil market, and should such headlines intensify in the coming week, we may see them supporting oil prices fundamentally. The recent upwards motion of WTI's price seems to have been interrupted, and also the commodities price action over the past 2 days, pointing towards the 80.2 support line. For the time being, we tend to treat the lowering of WTI's price action as a correction, given that the upwards trend line guiding it remains intact, and despite that lowering of the RSI indicator, its reading is still above the reading of 50. Hence, for the time being, we tend to maintain our bullish outlook for WTI's price action for now. Should the bulls actually maintain control over the commodities price action, we may see WTI's price testing, if not breaching, the 84.35 resistance line. Should the R1 be broken, we set as the next possible target for the bulls the 89.6 resistance hurdle. For a sideways motion to emerge, we would like to see WTI's price action breaking the 80.2 support line, breaking the pre-mentioned upward trend line, signaling the interruption of the upwards movement, yet respecting the 75 support level. Should the price action also break the 75 support level, we highlight as the next possible target for the bears the 68.1 support barrier. Thank you for tuning in to our financial updates. From all of us here at IronFX, we wish you solid trading.